Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site, we have Joyce. He's the Managing Director on Nasdaq's Market Intelligence Desk. We're going to take a look at technical levels to watch in the Nasdaq 100 as well as some individual tech spots within the space. It is great to see you as always, Brian. And it's kind of refreshing to see that stocks have actually been able to pin together a couple of green days, green on the week to kick off the year. What are your thoughts there? Are we starting to look forward and move beyond everything that was peak bad?
Absolutely. So we've definitely passed that point of, peak hawkishness, peak inflation. Last week's numbers on the wage front, we saw ISM services come down dramatically. It fell from roughly 56.5 to 49.5. Which certainly isn't good from an economics point of view. But if your concern is about, the Fed and their hawkishness, what they did last year, 425 basis points, they hiked. I think we definitely, have that peak inflation in the rearview mirror, and on the economic data front, we may have a window here where for the next couple of quarters, we might be in a scenario where the onset of the credit cycle, which we didn't see last cycle, may not come as soon as some people think. So I think we came into this year, with some, a lot of bearish sentiment, and I think more recently, as economic data is coming out, I think we're seeing more and more strategists moving into that soft landing camp, and even some are saying, maybe we don't have any sort of landing at all.
Right, well, if the market is considered a discounting mechanism, right, and if everyone expects the back half of the year to be a little bit more rosy than the front half of the year, in theory, that's probably why we are seeing, a little bit more positivity, because everybody was overwhelmingly negative coming into the year. But let's take a look at some of your charts here. Let's start with the Nasdaq 100. I also want to take a look at the semis too, because some of those names are the ones that lead in an early recovery phase.
Yeah, absolutely. So, the Nasdaq 100 is very interesting here. We could see that this is the weekly period chart. And if we look where we bottomed back in October, we retested those lows in the final week of December. That was a pivot low back from September 2020, which was an interesting time back then. But the last 2 weeks, these are weekly periods, like I said, you can see last week and the week prior, we bottomed right at the lows where we closed in October. Those candlestick patterns, those doji patterns where the open for the week is right around the same level where we closed the week with the long wick below it. That's typically what you see at the end of a downtrend, the reversal at the end of an uptrend, and we did have 4 weeks straight down going into that. So we are bouncing firmly higher here. This week is your confirmation. So we have another day and a half or so of trading to confirm that the bullish uptrend that we've seen, the bullish reversal. And so that looks good on that time frame. If we want to zoom in a little further, though, we can see we're just getting above the 50-day average, yesterday's close, and then today a little bit upside from there. But we do have this, these recent highs from November and December to get through, and right along there, right above there is the 200-day moving average, which is 12,153 right now, and it's still trending lower. So, we're certainly not out of the woods yet.
Yeah, well, let's take a look at the SMH. Of course, that's the semiconductor ETF, and there's a lot of representation of those names within the Nasdaq 100. But yourself and a couple of other technicians have identified what potentially could be a start of a bullish pattern here.
Yeah, so absolutely. So, we've been seeing technicians highlight what potentially is a inverse head and shoulders bottoming pattern with the low made back in July, and then the more recent low in December, nearly identical, and then the lower low was made in October. So, the neckline around that is, well, on the right side is around that 28.45 level. This is for the SOX index, not the ETF. We do have a little bit of an imbalance between the two highs of the shoulder, so it's not a perfectly symmetrical pattern. So, just wait and see how this plays out. But we are back above the 200-day moving average, whereas the Nasdaq 100 is not yet. So, if, as you say, this is a leading kind of group within the tech space, then maybe that would be a good sign. So the recent highs for this, like we said, is 28.49, and that's something a level I would look to for sure. And
of course, the big banks kicking off earnings in earnest tomorrow, and part of the negative sentiment crowd was estimates have not come down enough, right? And so what are your thoughts around earnings there?
Yeah, in general around earnings, we did see a pretty significant revision in estimates from where the street thought Q4 earnings were going to be at the beginning of the fourth quarter to where they were at the end of the quarter. So materials saw the biggest negative revision, followed then by discretionary, communications, and then tech. So 3 of those 4 sectors are pretty big weightings in the Nasdaq 100, but that's seemingly all baked into the stock prices right now. So what will be key going forward is to see what the results are for the earnings and what guidance is from the management teams.
Yeah, I think that's really is what's going to be key here. And then to your point, with estimates being cut, again, the risk is to the upside, right? Because if it is better than expected, or if guidance is even a little bit better, if you start to hear management team saying, we think we have come through the peak bad stuff, to your point earlier, the risk is really to the upside.
Yeah,
If everyone was so negative coming into the year.
I think the risk right now is to the upside. Everyone, I think, came in, when I say everyone, the sentiment, the broader sentiment, the majority seemingly came into this year with a lot of negative positioning, a lot of negative sentiment. And the CPI data, the inflationary data, that's peaked around 6 months ago. And so I think we're seeing now that first wave down in 2022 was the illiquidity move from the rate hikes, from the inflation. I think we now have a window here where the economy, we can see what the economy can do. Everyone's saying it's very resilient. We know the job numbers are still holding up. The unemployment number actually ticked lower last month. Wages are coming in. The leading indicators are certainly concerning, and that's a big deal. So I don't want to dismiss that or, minimize that.
Right.
But when is that credit cycle going to actually come about? Is it going to be this quarter? Is it going to be next quarter? At the moment, the broad consumer numbers seem to be pretty positive right now. Savings rates, things like that. So if the consumer needs to tap their credit cards, I think there's a lot of room for them to do so. So concerns about is the credit cycle going to hit here in the near term? That I think could be getting pushed out, and we are definitely seeing strategists becoming more optimistic, I think, on the economy. So if we do have another leg lower in the stock market because of concerning corporate earnings, because of credit deterioration credit, it may just be something that is a little further out in time, which could hopefully allow for the stock market to recover a lot of last year's losses.
Right. All right. Let's hope so.
Yeah.
All right. Appreciate the insight as always, Brian. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.